Hello and welcome to the special series on budget. This is our third series that we are hosting, and ETBFSI.com and ETCFO.com is holding this series together every Friday. In fact, this is our annual practice that we do this series every January, and this is kind of a run up to the budget. As we are away just 14 days from the budget, there are a lot of expectations, and we focus specifically on the finance. We try to decode what are the practitioners, the CEOs, the BFSI leaders, and specifically the economists are expecting or would like to see specifically in the budget. So, my name is Amol Dethi, and welcome to this particular show. To begin with, let me introduce my speakers to you first. My first speaker for this particular session that we have is Mr. Ajay Kanwal, the MD and CEO of General Small Finance Bank. Ajay, glad to have you. My next speaker is Ms. Radhika Roy, ED and Senior Economist at DBS Bank. Radhika, glad to have you.
Hello, good thing. Happy to be here.
My next speaker is Mr. Anand Roy, MD and CEO, Star Health and Allied Insurance Company. Anand, glad to have you. And my next speaker is Mr. Manish Jaiswal, MD and CEO of Griham Housing Finance. So we have economists, bankers, insurers, and an NBFC expert, going to talk a lot about, the budget 2025. And let me begin by asking one common question to all of you: is specifically, what would you like to see in the budget? And Radhika, I would come with you first and take your expectations.
Thank you so much, Amol. Certainly, I think there's generally a lot of excitement going into every year's budget. And in fact, we had a bonanza last year because we had two because of the elections. Going into this year, I think it's important from a perspective for me, for the government, especially because they've come back for a third term, and this is the first full year budget they're going to have with that term. So I would look for a couple of things. I think from an economics point of view, I think the first thing would be, what is going to be the theme? For me, I would think it's essentially consolidation without expenditure compression. That's the biggest challenge that any government faces, including our own. So you're going to see emphasis on wanting to continue to spend, but you still want to consolidate finances. So at the underlying, I would look at some of the numbers that are going to be released, especially, so that gives you an idea of how realistic the budgetary assumptions are. So from that point of view, I would think things like, what is the growth assumption? So for instance, last budget, the assumption was 10.5%. Actual seems to be less than 10. I would look for a 10.5% number again for fiscal 26. Then would be the revenue assumptions. I would think ballpark 9.5, 10% kind of growth numbers for revenues on a whole. Then would be the capital expenditure. There, I would think that they would be closer to, again, 11 trillion or 11 lakh crores. So this would be the larger nuances, but certainly continue to achieve some of the social sector objectives that they have, with also spending on capex expenditure. This year, I think because of the budget, you really didn't see, it was a lot of backloaded, the spending, which is still going on. But I would think that fiscal 26 should be much more on track because they have an entire year in front of them. So certainly an important event to watch out for.
Certainly, that was good to begin with the economists' view specifically, and I copy you. Radhika will come back to you. Ajay sir, let me understand from you, what would you like to expect from the finance minister on 1st of February?
So, Amol, thanks. And a few things. I think one is the budget has to take into account the geopolitics. Because obviously a new administration in the US that talks of tariff. There is a probability of inflation-led behavior that may happen. I think we've seen weakening of the rupee in the last few weeks. I think that is very relevant for us because beyond a point it will be detrimental to us. I think the third piece very important is what is different. I mean, there is of course some very good more of the same that we should do. But I think we should look at something differential where things like capex actually help the common man. So for example, and Manish will of course relate to this, Let's say the capex was spent in building a million affordable by the government. Very different answer. So we'd still have capex, but we'll still touch the common man. I do think that the whole common man thesis or the rural thesis needs a bit more focus. So I'll give you a simplistic example. About you and I go on a holiday, we check into a hotel, and the bill comes after we check out, and there is GST number asked by both of us, and we don't have it there because it's a personal holiday, right? Why can't I give my PAN number? Right? I mean, I just feel there is a lot more that we should do, which is slightly differential than what we've done in the past.
Right.
Realizing that we get more and more formalized economy, we get less and less cash, and
Right.
we really help a broad set of from my end. That's it. Thank you.
Certainly, I think when we specifically talk about the Vikasit Bharat and India at 100, 2047, I think we need some bold measures for sure. Let me come back to you, Ajay, very very soon. But let me take this view from Anand as well. Anand, what do you think specifically from the insurance perspective? What would you like to see?
Thanks, Amol. Thanks for having me on the show. And see, I think the broader objective is laid out very well, isn't it? Over the last 10 years or so, we have seen that the government is focused on growth as the main driver of the economy. I think when we're talking about 2047, like as you alluded to becoming a fully developed economy, I think the growth focus will continue to remain, in my point of view. I think, but the quality of growth is what I think the government will be focusing more on, specifically coming to health and healthcare and health insurance. I think there is a lot of good thing which is going on already. Multiple programs which is very very beneficial to the society at large. But I think more needs to be done because given the size of India's population, I think more investments in health is something which is the order of the day because we again go back to the age-old adage of health is wealth, isn't it? Unless
Yes.
uh, unless there is health, there is no wealth creation. Okay, so I think that is what I would be expecting: more investments in healthcare, more investments in digitalization of health infrastructure, and also there's a lot of innovation happening on the healthcare side. I think I would be looking forward to some of those innovations in this budget, and we'll have to
Right.
closely watch on those areas. Yeah.
No, certainly. In fact, I will come back to you. I mean, health insurance is only one aspect, but the cost of health as a whole has gone up so high, right? So, if there is anything that the government can do, maybe we'll pick up your brain there. But let me bring Manish here and take his first view on the budget expectations.
Hi, Amol. Thanks for having me over. Um, the first things first, I think we did see a blip in the last quarter on GDP. So the primary thing which I would look forward to is to ensure that the consumption gets up. The urban consumption is slowing down.
Hmm.
The rural should accelerate even more. So I would feel that all the measures that we take hereafter in next fiscal should essentially promote consumption because we want to be the third largest economy and we have a goal, and we really need to ensure that come what may, the growth comes back very fast and we hit towards the 6.5 to 6.7 mark. I think Radhika will bear me out on what the better number would be. She is much able to forecast. But coming from my point of view, I feel that in the next budget, um, there is there is a viewpoint which I personally have is that the that there is a good case to overhaul India's inflation management strategy.
Hmm.
What I mean to say is that instead of relying solely on broad measures to tame food prices, we should have very targeted investments and reforms to address our basic core issues. I mean,
Hmm.
we aspire to become a 10 trillion economy, and we can't let tomatoes, onions, dominate its growth economic narrative. By adopting the global best practices in agriculture and having targeted interventions towards few veggies, vegetables, or such consumer items, and recalibrating the CPI basket. Today we are very overweight, 45% inflation on CPI, and the fact is that when the GDP per capita has more than doubled. I think we are 2,500. We were at about 1,000, less than 1,000 about in 2008. It
Right.
was at that point of time, food was a very overbearing proportion. And you compare this with even Vietnam or any other Asian economies, forget US, which are at 13%. So I think we should just not allow that narrative to soften or cool down the larger industries and larger economy. So I would feel that's one. Secondly, I feel that in the retail and personal finance, 47 to 50% of it is home loan. It's very specialized vehicle. Home loan is very different from all other loans because it's a long tenor loan, and government
Right.
has taken very bold measures, especially PMAY Urban 2.0 with all its four pillars. That should really take off in a big way, and I feel the current program partnership with the MOA, NHB, and the government has been fantastic. I think that rollout should play out well. I
Okay.
think the mortgage the the RMBS vehicle which the government has floated, that will provide a terrific fillip to a lot of housing finance companies. That will do well. And the mortgage guarantee fund, which is getting revamped and rehauled, I think that would kind of really stoke housing, because housing drives more than 400 clusters, industry clusters. So I
Yes.
feel some
Yes.
of these measures can really promote growth and consumption. So I would look forward to some of these measures taking off.
No, certainly that's a very interesting list, Manish and Radhika. As we discussed partly earlier, themes and the growth. Let me come back to you. Manish was talking about tomato and the 45%. I'm sure every economist looks at the tomato rate every week and every month, I guess, and the onion prices. But when you look at broadly the 2024 budget, there were major four themes, right? Employment, skill, MSME, and the middle class. Obviously, those themes were quite intriguing and quite relevant. But currently, if you look at, there are two, three positive and two, three sharp negative factors that the government is going through. Obviously, when you look at the positive current account deficit, focus on India story, rural numbers, banks' balance sheets are clean, infrastructure is growing, some positive factors. But when you look at the negative, geopolitical, inflation, rupee, growth, private capex, major challenges. When you look at this, Radhika, do you think that the government will spend wholeheartedly, or they will look at the fiscal prudence part and go slightly slower? Because this is not an election year, also. They have already burned all the cash which they wanted to on the subsidies.
Yes, certainly very important. I think a good place to start, as some of our other panelists have also mentioned, is what's the backdrop against which the budget is being presented. That is where I think that will dictate some of the objectives. Of course, the resources are in any usually, which is the case, the resources are limited and the spending requirements are much more. So I would think that the target would be looking at segments where there is a significant positive multiplier. So what I mean by that is that what do we need at this point? You need the consumption to pick up, and some part of it urban consumption as well. We want investment to pick up, and the government has been playing its part on the private sector to actively participate. And at the same time, on a broader scale, because the geopolitical and the trade environment is going to become much more challenging, we need to have those changes which will make India a bit more resilient on the supply chain front as well. From that point of view, I would think the emphasis in the budget in terms of the announcements would continue with capex. So I don't think there's going to be a significant increase in the budget allocation from last year. I think it's still going to be about 11 lakh crores. I think they're going to maintain that size, but look more at ironing out some of the capacity constraints that we're facing at this point, and which the assumption is that the more the government participates in it, you will be able to draw in the private sector as well. On the consumption side, certainly there's going to be some taxation changes. It might not touch everybody on the ground, but I think there'll be some relief from purchasing power point of view. And the third one, like I said, supply chain wise, I think there's going to be a lot of work on that side as well. I think it is not limited to the budget. There's been a lot of things that are happening outside the budget as well. But I would think tweaking the import taxes, especially in the intermediate part of the value chain, becomes quite important. and providing tax holidays, making it much more lucrative for manufacturing companies to set up base becomes important as well. So certainly these will dictate. I think there are some. I don't think everything can be achieved just by 1 year balance sheet. But nonetheless, I think there's going to be incremental steps heading towards the 2047 goal.
Okay, incremental steps, but I do not know. I mean, I copy your point specifically on the budget capex side, where you think that 11 lakh 11,000 111 number will be restored. I hope that's a lucky number. But a valid point, Radhika. There, Ajay, let me come to you. The biggest challenge that we are seeing right now is on the private capex side, whether whitefield capex, greenfield capex is quite low. Do not know why the corporates are not spending. Obviously, the interest rate story we all know. What do you think will boost the consumption specifically on the private capex side? If you could, share your thoughts there, and in that direction, what can budget do?
So, Amol, I feel we did lose a few months since last budget for elections, followed by crucial state elections. So, have we released the full animal spirits of spending? I am not so sure. And I think probably we are seeing that part kind of play out now. So I do think there is a good chance of, government capex still really getting more sharper and getting more aggressive. I do think consumption will drive demand, and that demand will drive private capex. I mean, if you think of capital, if you think of what's happening in the stock markets, etc., there is no reason for us to be bearish or underwhelmed with what is happening. But I do think we need a few pivotal points which will change the way we are progressing. And somehow, in my mind, more of the same may not just cut it. We will have at least to give 10 to 20% of the budget to something which would be game changers.
Hmm.
I mean, we all talk of Viksit Bharat, but listen, fundamentally, we are trying to solve for the next 3 to 5 years. Our direction is clear where we want to head,
Right.
but I don't think we have that much difference yet. So the reality is, we are here and now. We've got a broad direction, but we need to do something more spectacular, more incisive, more decisive, and something more real and strong now. So I do feel that yes, 80% should be like keep to the trend, 20% we should take.
Sure, that was a very relevant one, Ajay. So, friends, those who are watching this particular show on any platform, whether LinkedIn, YouTube, or the ETBFSI website, can share your questions on the chat. I will try my best to take it with the speakers that we have. I have already started receiving a couple of questions, but let me move to Anand. Anand, we discussed, health part sometime back. The biggest challenge that India is going through right now is, the cost of health is going up. Fortunately, there are even couple of health insurance companies operating in only health space. There are general insurance companies, life insurance companies are also offering health insurance policies. Government is also doing Ayushman Bharat. But what is the way that you think health can be solved? Obviously, health insurance needs a big boost. That is not a there is no second thought about it. But what do you think will get a big boost specifically in terms of managing health really well of the people of this country?
See, Amol, I think this is a very, very important and a very large question, and you have to look at the current status of being as far as the healthcare setup is concerned in India. 50% of healthcare expenses are still out of pocket,
Right.
though it has significantly come down, which used to be 60% or higher earlier, because of various government projects and also the various things which companies like ours have done and insurance companies have played a role. But I think the larger question is, I think we have to focus more on prevention rather than look at how do we take care of hospitalization. I think if you ask me, I think investments in primary health on secondary healthcare setups is very much critical, and that's why my first, to your first question, I was alluding to that. I think the contribution of health expenses in the overall budget is significantly low in India. We are less than 2%. I think the aspiration is to get to 2.5%, but 2.5% is also a very, very low standard if you compare to similar economies of our size. I think so. I think there's a lot of work to be done there. But honestly, what you were asking about, how can the government play a role? I think the government can definitely contribute in this budget by bringing in factors which can reduce the burden of, insurance at least, if not anything else. I think there is a talk about, some kind of standardization of the tax, the GST on health insurance. I think there is some discussion going on. If these kind of initiatives are taken, I think this can definitely help the public at large, especially the lower and the lower income group and the middle income group segment, which we are trying to focus on here.
Sure. I think unfortunately Ajay has a limited time. So what I will do is, Ajay, I will shoot one question to you, and then you can go and catch your flight, and I will continue with the other panelists because I have lots of questions for them. So one important question, Ajay, I want you to answer before you leave go is on the FDI part. FPI is low, but that's a market point. FDI has been low since last 10 years. I understand that the government is holding discussions with the bankers, and even fintech companies, because even the fintechs, the FDI is very low. Any measures that you think that the government should do specifically to, maybe increase the inflow of FDI?
So, Amol, I feel the current strategy around PLIs is a very strong one. It has shown impact. I think we may probably be stuck in a timing issue rather than a strategy issue. So I think we just sustain and persist with what we have. But if you look around the globe, how many bright spots in the world do you notice? So yes, the US certainly for one. You wouldn't put Europe in the growth zone. Then you would take parts of Asia, very limited parts. Certainly not China, for example. That doesn't leave too many options for money to go. So I think we should not either lose hope or patience on that. I do think that we've got all the right things going. We just stay the course and we'll get the money. Having seen a lot of private equity partners and knowing them, I think they're very bullish on India. And I think all the folks who had really put a lot of allocation towards China have really moved that view towards India, the best bet here. So I think it's a matter of time, not that we should change anything or do anything spectacularly different. I don't think so. India attracting investment, being a strong investment destination, is a question mark. I think at best is like, probably a delay between rupee dollar, people are holding back, or US elections. It's more tactical in nature. I don't think anything strategic needs to be worried about or to be done. And Amal, really, you were very sweet, which is why I really didn't want to miss this. But thank you so much for allowing me a short time. I would love to be here longer, but I'm sure I'll do it next time.
Sure, Ajay. In fact, I was talking to a very senior research analyst just yesterday on the FDI part, and he said a lot of foreign investments wants to enter India, but they do not see the environment and specifically the profitability. I think these are the major issues they're facing. But yeah, thank you so much for your contribution and the time. We'll see you soon. And have a safe flight. Let me move back to you, Manish, and and then obviously Radhika and Anand. I have many questions to you. I have also started getting questions from the audience. So, Manish, maybe two quick questions. One specifically is: do you see interest rates slowing down in 2025? this particular year, though, RBI has, we do not know what stance they will take in February. That is one. And second is, we have been always we are seeing a lot of action specifically on the NBFC side from the regulator this particular year. What are your observations? Do you think that the government should look at certain issues? Because at one side, when we look at the financial inclusion, then we cannot go ahead and achieve that target without NBFCs or the fintechs, right?
Thank you. I think that's let me answer the second question first.
Mhm.
I genuinely feel that yes, the regulations have tightened. Yes, the regulations will have far-reaching consequences and impact. I personally believe that whatever changes, I'm just checking if I'm audible. Yeah. Um,
Yes.
whatever changes have been brought in, they actually have been good for the industry in the long haul. Whether I refer to the RBI circular right from April till December, um, and in general, I think the governance standards have been enhanced. I think um, I would completely sign up and say that at least from what I experienced thus far, uh, the the game will separate from men from the boys, and I think that game is on right now. And I feel as of the moment, um, now we are really poised for a takeoff from whatever has happened. I genuinely feel that um, there is now a need to separate is the type of NBFCs specifically. NBFCs have been called shadow banks, and I personally believe that they are not shadow banks. They are actually very specialized investment vehicles. They understand consumer with a deep specialization, and to that extent, they are the ones who are driving financial inclusion. They are right in the hinterland, and this is something which banks can't do, because banks have a limited wherewithal. They are generalist. They are a multi-specialty hospital, while NBFCs are specialized into specific, be it housing, be it personal loan, be it retail, be it auto, consumer, whatever. So they know their game, and they are very deep into the spaces they are. So I personally feel that since housing is 47 to 48% of overall personal loan, and it is a 20-year contractual maturity of a loan, there has to be a more fund flow. There has to be a more better liquid structures available in terms of liabilities and assets which are matching. I think that will be very good in the long run. Government is taking a lot of measures. I just hope that the accelerated measures will kind of really play out well. I do see that while we are in a precarious situation, we'll all watch out on what the new policies of US government are. But I feel that interest rate cut is on the anvil. It will be announced. What will be watched is how does the translation happen? How does it peter down? Because there can be a translation lag given the credit deposit ratio.
Right.
I presume that a credit deposit ratio, which is in 80s right now, it stays in those 80s and does not get into high 80s. And the deposit growth, which has been an area of a bit of a worry, that plays out a little better. So these are my quick views. I feel that on the interest and inflation, we should not expect too much of a change. I would rather say that while there could be a rate cut, we will have to really watch out for the transmission. Like the way last time about 250 basis points uh, repo rate hikes have happened. Probably what got transferred to the consumers were around 60%. And
Right.
similarly, it could play out the other side, but this time the transmission could be even lower because of the adverse credit deposit ratio.
Absolutely, absolutely. Thanks for adding that very realistic point. So even if by any chance RBI reduces the rate in February, we'll have to wait for more some more time because of the CDR point. Radhika, let me come back to you. I have two important questions, but let me shoot this question because which is asked by one of the reader, the viewer, because Manish spoke about this particular geopolitical part. I think the whole world suddenly has started talking about what will Trump do when he joins the office on 20th. That's the biggest question that everyone has. So considering that, what financial risks are you considering in response to maybe geopolitical shifts impacting India-US trade relations after Trump steps in?
Sure, that will be, I think, a single-minded focus for most of the countries, heading into 2025. I think especially the countries that are much more trade dependent. I think in India's favor, of course, the growth picture is much more domestic oriented, which certainly helps to counter some of these risks. But I think we should remember that among some of the countries that we watch particularly, what we see is that between China and US, for example, and assuming the first port of call for US tariffs will be China focused, between these two counterparts, India's alliance with China, with US, is much more than it is with China. For instance, in terms of trade partnership, in terms of FDI inflows, and generally diplomatic relations as well, is much closer to the US. From that point of view, I would think that the direct impact will be less. But no country is going to be unscathed. I think if you remember Trump 1.0, that term, when tariffs came into effect in 2018, there were some levied on India as well. In fact,
Yes.
there used to be a generalized system of preferences window that India used to enjoy. That was removed, and it's still not been reinstated. From that point of view, certainly, I think India will have to keep an eye on some of the announcements that will come. I think the moot point is this uniform tax rate or import tariff on everybody, universal import tariff, which is, the rhetoric seems to suggest about 10-20%. I think it won't be as easy as that. They'll have to revoke some acts to ensure that all the countries, will face these kind of imports. From, again, all of these angles, I think India will certainly be on watch. And I think if in this budget we're going to see some import tariff increases, I think certainly that will bring US's focus back on some of the tariffs that are additionally being put in as well. So I would think in
Right.
all, some of the Asian partners that US and China have, India is better placed, but certainly not immune to some of the impact that we might see.
Right. I think that was quite notable point, Radhika. Anand, whenever we look at the budget, the common man has only one question, tax बचेगा, ज़्यादा पैसे कम होंगे, रियायत बढ़ेगी, and automatically it benefits a lot to the insurance side. I think the government has done a lot of changes in the tax bracket. It has already given two alternatives, so we do not know whether they will actually relook at it. But considering the current situation of India, do you think that the government can maybe take a long view specifically on a taxation which will benefit products like maybe health, life insurance in terms of investment saving perspective? Any view on that side?
Yeah, well, I think the ask of the industry definitely is to consider, making, the tax saving available even in the new tax structure,
Right.
the income tax regulation, rather than right now it's available only in the old regime. I think if that can be extended, that will be a great benefit to the industry as such, both from
Right.
life insurance as well as health insurance point of view. I think that's definitely one of the asks. And as I've already mentioned in my earlier point, that there's some amount of active discussions happening both at the government level as well as at the industry level on reduction of GST for insurance products. I think if that can be also taken up, that will definitely help in increasing the penetration of health insurance. Now we have to understand, the context. Out of this 140 crore people in India, less than 6 crore people have health insurance of their own. Okay, the levels of penetration is extremely abysmal right now, despite all the efforts being taken from the regulator and the industry as such. So I think there's a very, very important story here to be told about increasing penetration of insurance in particular. And I think I'm sure that the government is seized of the matter. And what we are hearing, we believe that some active steps might be taken in this area. Let's wait and see. But we are really hoping that it happens. Amol, you're on mute.
I'm only on mute. Yeah.
Yeah, apologies for that. I said, Anand, this question was asked by three people on the similar lines, whether there will be a tax redemption and more opportunities for the saving. Thanks for answering that. One question, I will also look at other questions, but one question I will, I have for three of you is, and starting with Manish, is specifically on the job creation. When we have the broader picture, the bigger question is the job creation and employment and everything. Last year they came with internship and all similar schemes specifically for skills as well. Considering your own sector, Manish, when you look at the financial services, what kind of jobs have been created? Are you creating more jobs at your company, at your sector? And what is that you think maybe the budget should do to boost or maybe spur the growth of this particular domain?
I think it's a fantastic question. Let me compliment you. But one thing which I can assure that in the BFSI sector, most of us would be facing, the attrition is at its peak. And it may not be only in BFSI, it would be almost in most sectors. Now, what does that really mean? On one hand, we talk of unemployment. Other hand, we talk of high attrition, and the manpower cost for almost every industry, despite AI or natural intelligence, is still increasing. What does really it mean is that there is a play out. There is a play out of urbanization as a phenomena which is happening. Not too many people really want to migrate to large towns. In fact, there could be also cases where people are going back to their hometowns and they are happy over there. There is a very serious case to massively do a skill development program. I think the CSR has the budgets have been have been exemplary move. I feel that somewhere the component of that, if that is enhanced and included to build more skills in the country, because I also feel India is a place which will serve as a pool of largest doctors in an aging world, because Europe is aging, Japan is aging, West Asia, the Western world is aging. I think there is a case that in next 5 years there should be a massive fillip, and how can that be? How can that be managed? I think CSR could be one route. Secondly, within our own organizations, yes, we need. We are growing. We have a plan to continue our growth. Has been in the most affordable housing companies are growing between 25 to 30%, and they are adding manpower at that rate by about 15-20% every year if they have to grow at that rate. And we feel that we are now looking at models where we get fresh hires, and like we create pilots in a simulated environment. We on the first day and the first hour, these guys are ready to fly with a deep training program. So I think there is a need for a specialized training, simulated training, digital trainings, AI-led trainings, and couple that. And this funding has to come through some route, and I think CSR is a good route. And I feel that this is one thing which should be very clear. Secondly, I feel that there should be a targeted method of increasing the disposable income. Maybe you should not play with tax slabs, but play with something like what we believe from most of us who are watching the show here, that we would be staying in vertical homes, apartments, but the real India is actually in horizontal homes. How do you promote horizontal home formation? About 2 crore Indians who don't have their own homes. So when they buy homes, they avail affordable finance, they somehow get it. But for certain amount of interest or a principal component, if they get a certain tax break which is focused towards that, that will promote more housing for all, and it can be an all-encompassing strategy which will also lead to a lot of structural growth in the hinterland. So these are my a couple of views on your question, Amol. I just thought I'll round it off with these 2 points.
No, I think that was a broad view and a needed one. So Radhika, on an economic perspective, obviously, job was one of the theme of the budget last year also. But the overall numbers of if you look at CMI data and overall job creation or specifically employment has been slowing down, and that is one, maybe except one or two IT top companies, nobody's hiring. One is I mean, that can be also linked with nobody's going for a private capex very extensively. In your view, what will actually push the job creation in India? And if you take a broader view, the government has already been launched a couple of schemes on the skills internship sides, but still the corporates are perhaps not going ahead with far more aggressively. In your view, if you look at the employment as one aspect, what do you think government should do there without maybe spending more money there, but boosting the economy as such?
Thanks, Amol. I think that usually in the past budgets, we have seen a fair amount of supply side push in terms of the reforms, basically improving the operating environment for businesses, making it easier for them to invest. And while also looking at some of the core segments, core social development segments like agriculture or like women empowerment for that matter. And last year onwards, we've also begun to see that along with the supply side, we are also seeing a demand oriented push as well, especially when it came to so famously it was called PLI to ELI, right? So employment linked schemes, and I think it was a great idea to on real time basis take in private sector players. Government single handedly can't do much. I think it becomes a lot about matching of skill sets. I think there was one Teamly survey that was released this week, which highlighted that over 80% of the corporates actually agreed and they saw benefit with this kind of a scheme. But a majority also felt that the amount of people they'll be able to eventually take in will be small, because they still feel that there is a skills gap. So I think I would really agree with Manish. I think there's it's not about people not being ready. It's about people not having the right skill set in terms of matching. So that job matching, to my mind, will be very important. I think that should continue to get a focus in not only in the budget but outside of the budget as well. But on the other hand, you also need enterprises to be able to absorb this labor. I think on the services front, we've really seen the GCCs that have really come up in a big way. They've been employing, a fair amount of people. But end of the day, the intermediate part of the manufacturing cycle, not so much the advanced manufacturing, but the intermediate, is where labor absorption is still quite high. And in recent years, we have seen the composition of workforce that has been taken and change a bit away from regular salaried, more into casual and unorganized. So that quality will also need to shift so that it can higher employment can result in better incomes. So I would think that this ELI focus matching with the corporate sector in terms of that will help with skill development, will also help with what are the needs of the industry that can be met readily by the available labor force, will become quite important. And from a supply perspective, continue to emphasize on the expansion of the manufacturing sector, especially export-oriented manufacturing, will be very crucial as well. And in part of that value chain where labor absorption is the most, I think these would be something that the budget could contribute to.
No, that is truly meaningful. Radhika, Anand, can you also go ahead specifically on job creation? Are you also facing a lot of challenges when it comes to hiring employees? Where are the mismatches that you see specifically in your domain?
So, Amol, I think the insurance industry as such has been one of the largest employment generating industry, in the country, both from direct employment as well as opportunities for intermediaries and so on and so forth. I think that continues to be on a steady state growth path. I think the regulator also has taken multiple measures, to increase the penetration of job creation, especially in the rural markets. There's a particular program launched by the regulator called the state insurance plans, and there we have, we have a concept of hiring women folks for distribution of insurance at the rural and at the Gram Panchayat level. I think these initiatives are definitely going to help in job creation. But as Manish mentioned, I think, some kind of allocation of CSR budgets, especially in generating employments at the rural markets, will definitely be, something that we would welcome. And we don't particularly see any challenges in generating, hiring resources. In fact, we are the largest employer in the industry as far as in the general insurance business. So we are growing, and we don't see particular challenges. But yes, I would agree that insurance is a very unique business because it needs that eye contact, it needs that human touch. Unlike many other lines of business which can get fully automated, I think amongst the financial services sector, especially insurance, would continue to generate employments in the years to come.
Sure. So, in fact, this question is on my list as well. So Radhika, I want you to focus on this specifically on the China. We haven't heard much from the government specifically on the China Plus policy, though it was mentioned in the economic survey last year, right? I think economic survey mentioned that the government should look at Chinese FDI very, very seriously. Do you expect some maybe pointers, some highlights specifically on Chinese FDI in the coming budget? Or that is one. And second, what would you like to see? Do you see that India should look at Chinese FDI far more aggressively now, looking at the growth that we are facing, the FDI challenges that we are facing?
I think in the budget per se, we might not see any country-oriented, policy changes. I think what the budget usually carries is the direction that they want the economy to move in. From that point of view, of course, ecosystem, fixing some of the plumbing issues, that would be much more in focus. But I think insofar as FDI from China is concerned, I think what you've seen from the authorities is that they have got a very clear point of view. In terms of investments, yes, they are welcome from all sources. Some just probably under more scrutiny than the others. And based on what you're seeing in the rest of the world as well, some of the investments that are coming in from FDI are under the from China are under the scanner, in terms of the competition it poses. I think India's point of view towards the Chinese FDI, I think, is going to be more towards a collaborative FDI rather than a single-minded, single entry for the companies. To mean that yes, money FDI can come in, but you do collaborate with the local player. You also have local representation, say, for example, on the board. And I think that is a very pragmatic way of attracting investments. And I think in the sectors that we need technology transfer, I think that's going to be the other one. Particularly, I think in some of the low capital, low intensive countries, I think sectors, there is ample number of players onshore already. I think where you would need perhaps some support would be advanced manufacturing or particular specialized manufacturing sectors like EVs, which have really caught on in a big way, sectors like chip manufacturing, sectors like electronics component and pharma, where we could see some technology transfer. So I think on case-to-case basis, FDI will be let in, and that's already underway. We can see that in terms of the policy announcements that are coming out. So I don't think the doors are completely closed, but certainly it will be much more in higher due diligence and seeking a lot more local participation from Indian counterparts. And selective sectors. I think that's going to be the way forward in our view.
Yeah, I think noted your points. In fact, well said, Radhika, on that part. Manish, I mean, every budget there is some commentary specifically on the affordable housing. I always wonder, on a personal level, why it's called affordable housing, because it's not affordable at all. Specifically, if you look at the metro cities. But when we speak to a lot of NBFCs and specifically HFCs operating in this space, they talk about a lot of pain points. Would you like to highlight maybe 2 to 3 pain points that you think government should look at when it comes to affordable housing? Because there's no doubt about the vision that the government also wants to build the houses for the people at large, those who cannot afford it. But when it's to maybe payment, when it comes to construction, steel, there are so many issues that they even the housing finance companies also face while financing this particular project. Anything that you want to highlight and you would like to see a change there?
First thing I must say that the central government has done a lot what needs to be done. And I genuinely compliment that over last decade or so, there have been landmark shifts in the which the industry has organized itself, especially the affordable housing sector. It's been growing at more than 20%, at least for last 7 to 8 years. Companies which were 1,000 crore are 10,000, 15, 20,000 crore in that range. And this goes on to say that there is a very strong latent need which exists, which is getting tapped right now. Some of the issues which I feel is that there should be a very large focus on the top 3 highest populous states, which are lowest per capita income. You have understood what name I am referring to. A lot of heavy lifting has to be done by states right now. And I think even if the center and state governments are different, there has to be collaboration, at least on elements of humanity, on elements of dwelling, of basic life and comfort to people. And things which are coming in the way right now, I think, or which can facilitate even more, would be a digital framework of execution, where I believe that the lawyer, court, cops come together on a digital platform, whether there are digital reforms and which are integrating with the court and cops and DRTs, so that the execution is far more higher. What most of us would love to have is that there's a default which has happened, and the delays of execution subsequently, if that can be enhanced effectively, if the liquidity of the collateral, because as it is housed as a collateral, especially in the hinterland, is not a very liquid asset. So I feel that like the way a digital India theme has got propagated, it's also a time that at least you connect the dots with SRO, you rule out all collateral frauds, we come together and we nab the fraudsters of the country. We come together, we get all the willful defaulters and we rein them in. People who have had a bad economic situation, there are, of course, credit guarantee schemes government is coming with. We'll try to take care of them in that way. But to say the least, we should get together, be it center or be it state, on a common platform where the lawyer, court, corps, they come together and the execution of the orders are experienced. So I feel that this will ease the economic index of doing business, and it will give us far more confidence to even go to a lot more states where banks have not even chartered them into. I think that's where I would feel a lot of heavy lifting could be done, and I would urge that it's now time for also the states, especially those largest one with largest population and lowest per capita, to really recognize the power of how this can be transformative, together and drive that. So that would be my high level view, Amol.
No, sure, sure. Thanks for adding that, Manish. I think the watch is ticking. Maybe last 1 or 2 minutes. Quick, maybe 1 or 2 questions. Anand, quickly, specifically on the FDI, 100% FDI in insurance. That is one of the highlighted questions. One, do you expect government to go for 100% FDI specifically in this budget? And more importantly, what kind of changes do you see if the 100% FDI is allowed in insurance?
Yeah, Amal, thanks. That's a great question. I think definitely this is something that we expect that will go through because the regulator also has been very positive about increasing the FDI in insurance. I think on the intermediaries and the brokering side, already 100% FDI is allowed, and on the insurance side, company side, I think it should happen hopefully. But I think more importantly, India as a country, with all the kind of population that we have, there are 60 odd insurance companies, operating right now. And we believe that obviously, there is a room enough for many more companies to come in. So if an FDI 100% is allowed, definitely many more international companies will find it interesting for evaluating the Indian market. And we expect that investments will increase not only in the existing companies, but new companies will come in. And with new companies coming in, I'm sure there's a lot of innovation, a lot of technology transfer, a lot of data will come in, and which will help us in improving this business. So yes, to answer your specific question, I definitely believe that this will go through, and we look forward to it.
Sure. I think I will then shoot my last question to you, Radhika. I think I went through a couple of questions, but I think either we have covered it or maybe they are very, out of the box. Somebody wants to say that whether LinkedIn can be a good support to provide reskillings for the taxation part. We have already been, actually covered that. But Radhika, when you look at the broad picture now, we broadly discuss what should government do, what can government do, what is the current situation. But considering the global challenges, geopolitical tensions, and the government's current situation, whether the rupee is depreciating, growth is not happening at the level which we expected. NSO's target was 6.5% now. What is it that you think the government should not do, which will perhaps, disrupt the whole economy? What is it that the government should actually avoid doing in this budget?
I think rather than what they would not do or what they should not do, I think is what market expectations are always going into the budget. That there's going to be a lot more spending, towards boosting consumption, demand oriented. I think if we were to watch the last, many terms that they've been in office, the focus has been on macro stability, and I think that becomes important exactly in this environment that we find ourselves in. Where countries are being scrutinized quite closely. You've got pressure on the FX, pressure on bond markets, and where investors tend to be a lot more discerning on soft spots for various economies. I think in terms of the growth number, you did mention that it's slowed down from 8% something to about 6.5. I do think right now, if you see all the official forecasts, they're aligning towards that. Our own forecast is about 6.3 for the year that we are in at this point. So I think the macro stability point, despite the spending requirements, I think that will not be taken out of use. So in terms of fiscal deficit, we do think that it will be brought down from 4.8, 4.9 to 4.5%. But I think we'll also see one more thing, which probably this year's budget or the next would be to align the deficit target with overall debt. Debt overall, center and state put together, needs to also start coming down. So I think that there's going to be an alignment on that front is what we expect as well. So maintaining macro stability, despite the various tugs that the economy faces, will be crucial. I think so that will keep fiscal consolidation in place. Even the current account, we think, will stay under the threshold of about 2% of GDP. I think that's where it's most comfortable in terms of financing risks as well. And the much spoken about, because you brought in the rupee as the reserves. We
Yes.
compare the reserves always with where are the obligations, and when we compare that, you actually see that the current stock is still very at very well cushioned. From all of this point of view, and the the year that we are heading into, I think macro stability will be certainly very important. And I do think that the budget um, uh, will spend where it's required, especially on the capex side. But I think it will be mindful of where the revenue buoyancy is, and overall keep fiscal deficit on a downward bias. So our target is at about 4.5% for the next year.
Certainly, and that's it. I think thank you so much, Ms. Radhika Rao, for sharing those meaningful thoughts here and giving a great perspective on the economy. Thank you so much, Mr. Manish Jaiswal and Anand Roy. We had Ajay Kanwal also for this particular session. Thank you so much. Those were really relevant points. I hope at least majority of these points that we discussed, we seeing that translating in the budget document, which is going to be there after 14 days. So thank you so much for being part of ETBFSI Budget 2025 series. And, thank you so much.
Thank you for having
Thank
me.
you.
It was a thank you.
Thank you. Thank you.